All right, everybody, welcome back to your boot camp. It is day 7, and as I mentioned in day 6, this is pretty much our last overview day before we really start pinpointing everything. And so today what I want to do is just quickly, this is going to be a shorter video. It's just stuff that we have to cover, but we have to cover some market symmetry and candlestick reversals. You have to be aware that at any zone that you're trading, and anytime you're looking for a trade setup and you're looking for that confluence that we've talked about so many times, anytime you're doing that, you have to be aware that a candlestick reversal can be another sign to add on, that case and that reasoning for entry. And so what we're going to learn today is what those look like. Obviously, those are not very difficult to teach about because we can just show you what they look like. And then it's on you guys to go find those in the charts as you're trading. And so today I'm going to show you the examples. I'm going to talk about the market symmetry and different things of that nature. And hopefully a lot of you guys will start to understand and grasp these concepts. So first of all, you've learned all about trend, but you have to understand that you can't just trade with the trend all day long and expect to have a very rock solid strategy. You can still make money doing that, but you want to make an advanced strategy that gives you many more viewpoints and really basically what you're trying to do is make a big enough strategy that weeds out the losers and gives you an opportunity to have a very high percentage, high accuracy trading setup that will of course make you more money. And so the first thing we're going to talk about today is symmetrical triangles. And symmetrical triangles, as it says here, let me get my pen out, are continuation patterns, and they generally have basically it's a pause in the market. It's very similar to a horizontal channel in a preceding trend. It's identified as having two converging trend lines that take the shape of a sideways triangle, similar to that. We have great pattern traders inside of CPSG as well that trade solely off of patterns like this. And so it's fantastic to know that. And for you guys, you just have to be able to understand what they mean, the terminology behind them, and then I'll show you examples. So this pattern, as it says here, can mean that the market has simply gotten ahead of itself and it needs to consolidate, which basically means that if we're in a bullish market, what I mean by market has gotten ahead of itself is very simple. It means that a lot of buyers are not so sure if the market's going to continue to go up that quickly, so they actually pull their positions. When they pull their positions, the market suddenly slams down and starts to battle back and forth before heading higher. And so it's very important to remember that market psychology and reverse engineering what I'm saying is important. And so attempts to push higher are met by selling, and attempts to push slower are met with buying. Very similar to what we learned last section with these horizontal areas. It's very simple compared to that. It's just a little bit different of a shape, essentially, is all. And so volume is typically lower. And so when you go to Oanda order book in those times, you'll see a little bit of a differentiation on the volume. You're not going to see as many bulk spikes. You may see some spikes, but not as many bulk sections in that actual pattern. So that's good to understand because it's not necessarily the most fantastic opportunity to trade inside of it. You're really looking to trade with the trend outside of it. And so eventually, as I just talked about, the symmetrical triangle is going to end or resolve itself, and often with an explosive breakout in the direction of the preceding trend. So if you see a bullish market prior to this and then you see this, you expect the breakout. And once again, we're only trying to trade off of those retests, and we'll get into those entries and things actually starting. Structure is actually tomorrow, day 8. We'll start actually talking about entry. So tomorrow's when things will start to really crank up. But understanding that this exists is, of course, important. So obviously there is, two different triangles, and first is a bullish triangle. Second is a bearish triangle. And so the majority of the time a symmetrical triangle in an uptrend will break out to the upside, and a high volume breakout is more reliable than a low volume. What I mean by that is you want to find a symmetrical triangle that does this. I don't know why the pen did that. I apologize. You want to find a symmetrical triangle that does something like this. It shoots straight out. You don't want to find one that just kind of weeds itself out. When you can see this, you know the volume is there. You're trying to trade with that volume. You want to trade with that velocity. Who would rather be in profit fast than slow? Everybody. Nobody wants to just, be very, very small in profit and things like that. So these are just good examples of them. And secondly, understanding that symmetrical triangles in downtrends will typically break out to the downside. However, an increase in volume is not required for a successful breakout. So understand that, breakouts are going to happen. It has to. The market's going to break out. The type of breakout will dictate your action after. And so a significant increase in volume inside of it can be suspect as well. And so understand that if we have a market and you get significant increase in volume in here, you can get some crazy things to happen like that, or we actually go to the wrong side first. And so your goal is to find not necessarily a huge spike inside of it, but as we get to the end here, you get a spike right out of it. Okay, that's the goal of understanding it. And so what that looks like from a drawer's point is very simple. It's this. Okay, this is from an abstract point. I like to draw these out for you guys in the boot camp so you can see it, visualize it, feel it before we actually hit the chart with it. All right, so as you can see there, what was the preceding trend on the left? Yeah, bullish, right? What was the preceding trend on the right? Bearish. So if this came in going down and then created its triangle, we expect the breakout to not come here, but here. Same here. Now, if you're wondering on these drawings, notice how it comes up and it hits 1, 2, 3, 4 break. It's not always a guarantee. We can hit many more times in here and in here. Not always a guarantee. So understand that things can hit more, and instead of just having this hit and like this, we could actually have had this chop much more. Okay, so understand that, be able to visualize and draw those, and get your trend lines ready to go for that. And so here's a great example of one of these, just to show you, preceding trend prior to this picture came up, it was bullish. And so as you can see, all I did was start to draw these lines here. And you can see that the market starts to weed out towards the end, and you can see it start to get choppy, and then it gives, see this explosion of volume? All right, see that explosion? There was no high suspect volume in here. In fact, you can see it started to diminish, and it started just riding this wall. Bang, runs right to the top. All right, those are great setups because then you're going to have brand new structural supports happening, and buying opportunities will be even better and even stronger. Okay, so this is the triangle, and this is just one of the patterns that we'll talk about today. The next thing we'll talk about are flags and pennants. And all of these things, frankly, are not something that I go, overboard with in a live room. It's not something that I will just go into a live room and say, look at this pair because of this pattern. We're sequence, not structure traders inside of the boot camp. Obviously, I don't have any bearing on how you guys trade, other than the people that come through the boot camp take it to heart. You're going to trade like me. But, we don't utilize this as our first line defense to get in a position. Although some traders do. There's no reason with it, as we talked about earlier. If you remember, I said there's no magic strategy, okay? So now we're going to get a little wordy here. I apologize, but I need to talk about flags and pennants. And so, once again, very similar to these triangles. They're continuation patterns. And so the consolidation pattern usually represents just that pause in the market. And they're typically seen right after a big move, a big push, big volume spike, and then the market kind of calms down. And so it typically takes off in the same direction. So when we're looking at it, it's the same thing. Up, chop, up again. That's really all we're looking at. We're not getting too much crazier than that with this. You're trying to be able to figure out and identify what the preceding trend was and take good opportunities off of breakouts. We're not trying to trade inside of them too much because you can get dangerous and get some issues with that, okay? So once again, the market usually takes off in the same direction. As research has shown that flags and pennants are some of the most reliable chart patterns to trade, and understand they can be found in some of the most explosive moves. Almost any explosive move that there is going to be following a pattern. That's just it, because they're almost always following some sort of pattern, some sort of consolidation, which is typically a pattern of some sort. If you might have to look at different time frames to find that, but it's almost always like that. And so flag patterns in an uptrend are bullish, and they're typically referred to as bull flags. Bull flags are characterized by a sharp move upward. All right, now I'm not going to read all this to you because I get that that's a little annoying, and it's not usually my style of teaching. But I needed to get a good definitional basis to you guys of what these are, because it's all about volume. Everything that these are, it's all about the diminishing and the increasement of volume. And so there's going to be a short series of a counter trend look in these, where you're going up and then suddenly you have lower highs. And so you have to understand that's all about the volume capture. All right, so another flag, of course, bear flags are in bearish, and it's the same thing. If we're moving downward, it's followed by a short series of higher lows and higher highs. And so you're going to just need to understand that these are here, and it is on you, once you understand that they exist, it's on you to find them. Remember, there's no magic tool out there. There's no magic thing I can say to you that will teach you guys how to find these. It's all on you to go to the charts and find them yourself. So all you got to know is to know what they look like. Whether you have to use the workbook, whether you print the pictures out, whether you take notes and draw them, once you know what they look like, you'll be able to look for them. All right, and then secondly, of course, in pennants, they're very similar. Okay, these are, you know, pole-like, and they proceed with another sharp volume spike. So it's very similar, and the next word, you know, the next section I'll show you is some pictures. But pennants and flags really are all about that volume spike, and it's short consolidation. And all we're doing is looking at that preceding trend before the market spikes again. Okay, so I get that you know, this was wordy here. So let's get into some pictures. So check this out. This is a bull flag or a bearish flag. Okay, so this, the market, as you can see, was heading lower, and then we actually have a small bullish market, heads lower again. This was heading higher, a small bearish market, heading higher again. Simple as that. And so what you're trying to do is you're trying to find the opportunities here and here. Once we break the flag, you're looking for the retest, and typically you're looking for the retest of this structure level right there. So what I mean is you'll draw support off that level. Same with this guy, draw support, because once that breaks, then the high is broken and you're looking for those retests. All right, so an example of that and what that looks like, here's a bullish market. We go bearish. We break, so what would I do? I draw my support. Once we do that, see this? There's a trade opportunity here. It's a continuation whole pattern, as you can speak, and then the market fends off of a level that obviously we can't see in this picture. This is where the opportunity for a short-term setup will lie, depending on the situation. What I mean by depending on the situation, some of you guys may be looking for these in the 15-minute time frames, and that's fantastic. Some maybe we're looking at a monthly. Some maybe we're looking at a daily, 4-hour. The timing of this and then the length of this trade setup is dependent on what you guys see. So, you know, I would have entered after the reversal candle, which we'll get into in a minute, which is right here. These three candles make up a reversal candle right on support. So once again, there's some good information about that. This is one of the hardest sections for me to teach, because when we get in the advanced stuff, you know, we'll go on MetaTrader 4, we'll go through how to do, you know, some of these things. But with these patterns, there's not much to do other than the fact that you need to be able to know what they look like and start to utilize and see them. And how to do that is, there's one thing. It's being on the charts. It's practicing them. Okay? So with these patterns, we now need to know what a candlestick reversal looks like, because there could be some good opportunities off of those. So now that we've covered many basic principles, you're going to need to start identifying some characteristics of candles and what they mean for you. If you can identify these ahead of time, you're going to have some chances for great opportunities. The following slides will show you the main candles you need to keep in your head when looking at a trade entry. Secondly, what I want to say really importantly is I would take screenshots, or I would, obviously if you have the workbook, you don't need to do that. If you don't have the workbook, take screenshots or get the workbook now. And secondly, or just draw them out. Whatever you have to do, but you have to make sure that they're next to your laptop or computer or phone, whatever you're using to trade, because there's no easier way to remember them than just have them next to you. So if you see something that looks suspect or you see something that looks good, You can just look at the picture. All right. So following a candle confirmation and multiple confirmations from trend lines, SNR, Fibonacci, market patterns, you'll be able to enter with more confidence. So let's cover some of the most important ones. So as we progress to find zones for entering a trade, or we have learned to find zones for entering a trade, but having a candle to signify a reversal, it's going to, without a doubt, help you even more. Okay, it's going to help you even more. Once again, along with the trend and all that stuff, the candle will tell you the story. Take a screenshot of the following pictures, okay? Here's some examples of market reversals. Okay? Market reversal patterns. Now, what these are telling us is very simple, that the market has a better chance of reversing at that time. So when you're seeing these, and a lot of these are either or, you know, they can look this way or they can look this way. But when you're seeing these, this is so important to remember. And these some of them are going to pop up more than others. One of the most famous things that people like to utilize are tweezers or wicks. And that's a fantastic thing to look for. The characteristic of the wicks at highs and lows around your support are great. Because if this is a support line and we wick to the support level twice like that, it's telling me that the market's having a troublesome time breaking that level, meaning that a reversal could potentially come. Bullish engulfing candle. What this means is that we were bearish right before. Typically after a bearish candle, you're going to get either a smaller bullish candle or another bearish candle, but then suddenly buyers enter the market and engulf the previous. It eats it. We're heading higher. Okay? Here's like resistance rejection. We're heading lower. Bearish engulfing. We're heading lower. Okay? So take a look at these, and all of them are telling you a very similar story. We're looking to reverse soon. All right? And obviously it's indicative of the direction. If you're seeing these at the top of a market, if you're seeing these after the market's been bullish, 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 and you're seeing them with the correct timing, then you know the story. You know what's going to happen. Reverse at the top. If you're seeing these at the bottom, and you're looking at these at the bottom of a chart, you know that the market has a better chance of reversing to the upside. Okay? So, once again, these are all important. Here's another glimpse of it for you guys to take a look at. Okay? These are just good pictures that I think you guys are going to need to have. All right, these are the good pictures to have and be able to utilize so that each day you can come into the market, see this, and not have to worry. All right, take these with you. Now, what I want to say is this. You have just completed your first week of boot camp. The first week of boot camp for more advanced traders is a week of recap, is a week of review. Maybe they learned a thing or two. For a beginner trader, it might be overwhelming. But the goal of the first week was not to teach you exactly how to enter the market, but to teach you how to start to learn how to trade via technical analysis and ultimately learn how to mark your charts. So in week 2, when we start day 8, things will start to get a little bit more intense, in which, you know, we're trading on to MetaTrader 4. We're looking at MetaTrader 4 more. We're really getting into it. We're going to start with structure. We're going to get into the extension dip, Fibonacci extensions, the golden zone trade, the things that you guys have been waiting for. So once again, you completed day 7. I will see you for the good stuff. Day 8, I'm super excited. This stuff is mind-blowing and is what made me a profitable trader, as will it you. So I will see you guys back here day 8, starting tomorrow.